Hello, folks. Dan Bird here on Wednesday, November 20th for the Daily Scan. Today is NVIDIA Day. It's about 20 minutes before the close, and I will definitely still be going into the close and be watching NVIDIA, and I'll let everyone know what it looks like and where we might be headed as a result. So, first thing I want to mention is this is actually a suggestion from one of the YouTube folks. So thank you very much. Great idea. He asked if I would have a Black Friday sale for the website. And so I do have a promo code. So if you want $24 off the annual subscription, it's already pretty inexpensive. I mean, just the risk calculator by itself is worth the $99 for the annual subscription. But right now until December 3rd, you can get it for $75. And I think that it will also apply to current subscribers, although I'm not 100% sure of that. So if anyone is a current subscriber and want to extend their subscription and you give this a try, let me know if it worked. And if it didn't, let me know that too, and I'll make sure to accommodate you somehow. But hope you can take advantage of that if you find this information useful and all the stuff that I use on the website. So let's jump into it. Let's first take a look at the homepage. And you'll notice I did update this already. So it's a little before the close, but I don't think it's going to change too much. It didn't really change too much already. It actually ticked down slightly, but really not materially. So didn't really change the long-term signals, the short-term, medium-term, long-term. Still have a green light, so everything still looks okay. Let's take a look at the NASDAQ real quick, since that's where NVIDIA is. And you can see today, actually, as I was watching the market for most of the day today, it was interesting because I saw it selling off and we went right back into this gap opening right here. And what you can see now is that it's coming back up with about 15 minutes left. Might actually close even, or maybe even with maybe even in the plus side before the close today. We're going to actually look at that as the market's getting close on the 10-minute chart, which will actually update every 10 minutes automatically, and you'll be able to see it. But if I go back over here and look at the S&P, S&P should look similar. And you can see right there, it was already above the support line. Never really closed the gap down here. Let me turn my cursor on. Never really closed the gap right there and is now back up near the high of yesterday. And again, it's almost flat right now, 59.09, and it could even end in the positive by the end of the day, which we'll know when we're watching it. So all that looks pretty good. Let's take a look real quick. By the way, I've got the same Black Friday banner right here on the main page, the home page for anybody that's interested. It will give you access to all of these different tabs that I'm using. The ones that are free is the home page, of course, the books page. Anybody can get to that. Everything else you need an annual subscription for, including the risk calculator, which if you go to the more tab over here on the right-hand side, the risk calculator is right there. It's also part of our daily scan that we've been using, and I'll show you where to find that. I haven't updated it today, but I will update it. But that basically is on the portfolios page. And right down here is the paper trade worksheet, which we'll be working on again today. And if you click on that, you go to here, and it will require an annual subscription. So a monthly will not work because the monthly gives you a 7-day free trial, and I'm not going to give away all this excellent work. And by the way, just the risk calculator itself took me 2 years to create this. So there's a lot of work and effort that went into that risk calculator. And we use it in the worksheet as well. So anyway, if you're interested in signing up, there's until December 3rd, you get $24 off. So let's go to the charts page and take a look at the VIX. I have not looked at this today, so I'm kind of curious too, see what it looks like. So there's the VIX. You can see that it's into the gap in between 17 and 20 right now. So below 17, the bulls are in control. Above 20, the bears are in control. And right now it is at 1737. So it actually went much higher. So the VIX actually has pulled back today. It peaked much higher than that, way up here, and now it's pulling back again. So it's getting close to that 17 line. You can see the 12-month rate of change has really declined, ticking up slightly, but it's basically been hovering around this area that's essentially complacency. Usually when the market's moving higher, this is where the VIX is. So it's a little concerning that it has been moving up, but I think everything this week has been waiting for Nvidia. So it's all about Nvidia this week. If I go back to the charts page, we can take a look at the 10-minute chart right here. And I've got this separated by aggressive sectors and defensive sectors. So you can see all of these for the week. The vertical blue line is Monday's close. This is last Monday. We went over 6,000 last week. Right now, the open was down here. And look at where we are right now. I mean, you'll actually see that move. We've got basically about 15 minutes left. So this is the 10-minute chart right here between 340 and 350. Right there. That's where we are now. So the next one will be just before the close. So we'll see. There's the open. You can see that dash line right there. We'll see if we can close positive today. You can see just since about 2:30, the market's really been moving up. Technology has been pretty flat, but it's starting to move a little bit. Technology represents 33% of the S&P. Financials have been underperforming for the week. Discretionary is underperforming. Communication services, though, is outperforming. So it's looking pretty good for the week. Industrials is underperforming. And then if I look at the defensive sectors, right here, again, this is Monday's open. This is horizontal blue line. Monday's open right there. And still heading higher, so we'll see. We're down 4 right now to close even for the day. Really 0.07%, so it's nearly flat. Healthcare is flat for the week. Staples is down. These are all mostly defensive sectors. Staples is down. Energy is flat. Utilities is up slightly, and materials are up slightly. That's gold. So gold actually, I think, ticked up a little bit today. If we go back to the market bias matrix, and you can see down here, this is made up of indexes, sectors, industry groups, relative charts, commodities, metals, and currencies. And here's gold. So there's what gold looks like. So this week, actually last 2 weeks, gold has really been diving, but now the last 4 days, 3 days really, it's really been heading higher, and it's starting to get back above the 50-day moving average. So that's why the material sector has been doing well, because it's made up of a lot of the metals and the mining companies. So gold has been doing well, but look at the volume down here. I would be a little concerned with the volume because it's really not showing any conviction in this move. So we'll see if that move can hold or not. Also back here is the dollar. And you can see the dollar continues to just move higher. Ever since basically back in September with the first Fed cut, coincidentally, the dollar has just been getting stronger and stronger. So it's heading higher. The other one, silver, is one that usually follows gold, but it's actually not this time. It's actually reversing. So it had a little bit of a bounce, but now today it's starting to go back down. So silver is moving the kind of a little bit the opposite of gold, unfortunately. And you can look at gold miners as well. Gold miners pull back a little bit today, but was starting to follow gold higher, and silver miners too. Right there, looks very similar to silver. Actually, silver miners is going to give a bear medium-term signal. When this blue line crosses the red line, that will likely happen tomorrow. So we will have another bear signal on our matrix chart tomorrow. And lithium, which had a great run back here, you can see lithium from back again in September, and then the Fed rate cut, and it just screamed higher, pulled back quite a bit, and then went back up, and now it's just sort of bouncing around here in this area. The other thing to look at is the 10-year yield. 10-year yield is kind of leveled off now. So it went up to 4.5 and pulled back some, 4.3, 4.35, 4.4, between 4.3 and 4.5. Looks where it's like it's where it's kind of leveling off. If we look at a 1-year chart, you can see there, even though it has gone higher significantly ever since the Fed rate cut back in September, it is still technically in a downtrend, even though it has broken the downtrend line. So if we put a line here, this is a 1-year chart. Let's put a line from up here, the high, down through that high right there. And you can see it broke the downtrend, but it still is technically in a downtrend until it gets back above this level over here. So until it makes a higher high, essentially, it is still technically in a downtrend. So we'll see what happens right through here, but I think it probably is going to start to go sideways right there. And kind of along with that, we can look at bonds to see what they're doing, and they aren't really perking up much at all. So bonds are still staying down here, haven't really moved much. So I would say it's not yet time. It might be making a bottom right there, but it hasn't really provided any conviction. And you can see even with the 2 up days, volume is really no conviction on volume. Just out of curiosity, I want to look at the S&P volume on that. Not too bad. Actually, volume is right about average. This is a 21-day moving average of volume. So for the S&P, it's right at average. Let's go back and look at, we're in, yep, there you go. So it went above the open for the day and did pull back. So that is resistance. So that should be expected. But just in the last few minutes, it went above it and then pulled back a little bit. And it's only $3 right now below being positive for the day. We'll continue to watch that. We don't have much time left, just 7 more minutes. Everybody's waiting for Nvidia. So we'll see what Nvidia does. What else do we want to look at? We've got cybersecurity gave a short-term down signal today. You can see it's right there. It actually, because I did that early before the close, it actually may technically not be a short-term down because it pulled back, it came back up quite a bit. So it may have actually saved itself from that short-term down. We'll see how it closes today. But everything is looking pretty good. Let's just out of curiosity look at Nvidia. So Nvidia had yesterday had a nice rally. Today pulled back, and now it's up in the upper half of its range for the day, which is good. Volume is, average, kind of average, really not huge. Volume has been declining all the way through this uptrend, though. So you can see that moving average line gives you a sense for what volume's been doing. So volume's been coming down. Everybody's waiting for their report tonight. It's going to be really critical to see what happens. Okay, what else? Let's see. I'm going to answer one question that somebody asked me about when I showed the daily scan. Let me actually show that. Close some of these out. I'm going to show the daily scan, and somebody asked me when I was looking at the charts for Kava and ADMA. They asked me why I picked ADMA, because it looked like it had been in quite a bit more of a downtrend than Kava was. So let's look at those two. Let's first look at ADMA. And the first thing you'll notice is that it's up today. So that's good. But I think here's what they were talking about. This big, and I think earnings were on the 7th. So this was not earnings. I think this was just profit taking right here. So this, I believe this was earnings back here. So ADMA gapped up. It has been consistently been in the top 10. It's in the top 10 again this week. We go to the charts page over here. You can see these are the top 10. It gets updated every week. And this week, anything in green is in all three lists. So ADMA has been, even though it fell out, it might mean it's number 12 or 11 or something. But ADMA is in all three lists because it's green. So it's been in the top 10 consistently over and over again. So that's one of the reasons that I picked it. By the way, all of my scans are done against the top 10 list. These are accumulated over time. So even as things fall out of the top 10, they still get added to the list because they still are typically strong stocks. And I also use the top 10 large, mid, and small cap for the S&P. Those are also included in this list. And you can download this. It's a CSV file, so you can download those top 10 stocks and import it into your own. There are 232 stocks in there this week. It's roughly about what's usually in there, between 200 and 250, which is, I think, a pretty manageable number. But you can download that into your own platform if you want to use it yourself. And it does require an annual subscription in order to get to this page. But that's one of the reasons I picked Kava. I picked ADMA. The other reason is during this downtrend right here, I want to show you the volume because anytime, first of all, whenever it very, very little volatility. So there's not big candles other than the first one. There's not a whole lot of big candles through this until it starts to perk up a little bit over here. But if I look at the volume, and I can do this on this one, here's the volume down here. Look at how volume through this whole period right here. Look how volume was below average through the whole period. So that's what I want to see. If something's going to pull back like that, especially if it's profit taking, and it's been in the top 10 consistently, and it actually hit a new high, hit a 52-week high up here. During this pullback, it was on very low volume. So you want to always look at the volume as well. And then when it started to move up right there, it gapped up right there and has not filled the gap, but it did so on big volume as well. Then we had another big day right there on big volume, and then it pulled back right here on very, very low volume. That's exactly what you want to see in a strong stock. You can also notice down here that it is outperforming its peers, and it has a nice uptrending accumulation distribution line. So those are some of the reasons that I chose ADMA. So now let's look at Kava. And Kava today did the opposite. Kava actually pulled back today instead of going higher like ADMA did. Did not get down to our stop, so it did not stop out of our list, but it did start to move lower. Again, Kava has consistently hit the top 10. It's consistently made higher highs. Had earnings right here. Excellent earnings. Gapped up and then sold off. So this is all profit taking right through here. So now the profit taking should be waning. And I think this low from Monday hopefully is going to be the low. My stop is right below that low. That's why I put it there. So if we look at volume on Kava, now for here, the big volume right here is earnings. So big up day on earnings, and then it sold off with profit taking the next day. And the two down days, the two red ones, are on higher than average volume. It actually is not a great thing. And actually the day before earnings, it was down on higher volume as well. So we really need to keep an eye on this one to see if it's going to recover and get back to its trends like it was before. And there's the closing bell. So we're going to know about Nvidia here shortly. Let's go back and look at, well, I'll have to go back to the charts page. and look at the 10-minute chart again. So there you go. Zero. Look at that. 0%. It is 23 cents above the open. Technically, it's positive. Look at the positive volume that came in right at the end. Last 30 minutes, basically. Last half hour of the day. And as it sold off through this period here, it was on lower volume. So I think, again, the market was waiting for Nvidia. We'll see what Nvidia does here shortly. I actually have it up on my other screen. I don't think they reported yet. It's basically flat right now, but I'll tell you what happens when they report. Okay, because the market was struggling today, especially in the morning, there are no new scans to add to the list, but we can look at the ones that are on there. And I actually have raised the stop on a couple of them. So on DocuSign, stop is now at 76. It would be a 7% gain if it gets stopped out. So there it is right there. You can see it was pulling back right there. So the stop got moved up slightly. It was at 75, so just moved up a little bit. On VRT, also moved the stop up. So this is now at a 16% gain since the 5th. So 2 weeks, basically, 16% gain. And it's up here right now. So it pulled back a little bit too, but it had a huge day yesterday. So that's to be expected. That's consolidation. That's usually what happens. Stocks, when they have a big run, they need to consolidate. That's actually healthy for them to do that. A lot of times they'll move higher after that consolidation. There's one other thing I want to show, and this is really everyone's personal preference. The reason I'm doing this doing it this way with the daily scan is to show how to move stops up and find strong stocks, find good entry points after they pull back. You can see the entry point on VRT is back here. But one thing that I learned from John Carter, and he's a short-term trader, but one thing I learned, and he does mostly options too, by the way, so this might be something that you could use for options. But one thing that he said to me was when he gets an entry point, and he has different ways of identifying the entry. He uses a squeeze, which is his own not proprietary, because it's actually free and you can get it on other platforms. Just look for the squeeze. But he'll use the squeeze to get in, and then he says, I'll stick with it for 8 to 10 bars. So that's 8. If it's a daily chart, that means 8 to 10 days. If you're using a 10-minute chart, that means 80 minutes. If you're using a 1-minute chart, that means 8 minutes. But on a daily chart, like what we're doing, that would be 8 to 10 bars or days. So let's count that. So if we got in there, be 1, 2, 3, 4, 5, 6, 7, 8. Right there, that's where he would think about getting out. And 10 would be this bar right here, interestingly. And if we look at this on the Keltner channels, you can see right here. So here's the entry point right at the reversion to the mean, the 21-day moving average. That's what I use to try to identify entries. So right there, and the Keltner channels basically shows you the average true range. The green one is 1 average range for the day, above and below the mean. The blue is 2 times the average range, above and below. The red is 3 times the average range. So let's again count 10 bars, 8 to 10. There's 1, 2, 3, 4. It's already above the 3x. Pull back, 5, 6, 7, 8, right down here, 9, 10. So 10, again, it's screamed higher above the 3x average true range. John Carter would probably take his profits right there. And at some point, we might start doing that. We might do the entries the same way, but just start taking profits at 8 to 10 bars and just see what our performance is. That's one nice thing about using this, this worksheet. Is you can play around with things like that. You can put notes in on the right-hand side, and it will show you. We don't have to wait for it to stop out. That's what we're doing here right now. But we could go ahead and take profits at 8 to 10 bars. It would be way higher than this. So VRT right now, instead of 130 for the stop, it's at 137. So another $7 on top of that. So just wanted to point that out. Everybody has different styles. In fact, just to review, I keep forgetting to do this, but I am not a financial planner. I'm not giving you advice on what to buy, when to buy it. Everybody has their own risk profile and trading style. You must take responsibility for your own trades, do your own due diligence. This is for education purposes only. If you do decide to engage with a financial advisor, I recommend that you go to this site and make sure that they are reputable. So just keep that in mind. So let's see, NVIDIA. So there's NVIDIA. It's not showing us much yet. Right now it is still flat, really flat for the day. Actually moved up 10 cents so far, so they haven't reported yet. So at any rate, there's different ways of trading, and that's one way that you could do it. By the way, all of these charts are available to annual subscribers, and I update a lot of these things every day. I haven't updated this yet today, but I will. I'm going out to dinner tonight, so I won't have time to do some of this until I get back later on. Also, the trend models help you track the indexes, the sectors, and the Magnificent Seven, plus a few other ones. And it shows you the short-term. I'll just show you on the indexes. Shows you the short-term, medium-term, and long-term signals, and shows you the dates that they change. And if something changes this week, it gets highlighted right there. So you can see right here, gold had the short-term down on November 8th, but it's coming up now. So the next couple of days, if it continues, this will get an up signal. And there's different charts over here that you can look at. There's a long-term chart for gold. You can see right there, it's been on a long-term trend since all the way back here, beginning of the year. If you are a long-term trader or investor, then you could have got in back here using this chart and just stayed in it. You'd still be in it all the way here with gold. Or you could use a shorter term on the right-hand side. And in this case, the exit would have been there. And the entry point would be probably tomorrow. There will be an entry point for gold. So if you're short term and you don't want to go through the drawdowns of a long-term period, then this is one way to do it. But all of this is on the website. So anyway, let's take a look now at what our worksheet has done. I showed you these two. Let's look at Oracle. Oracle was coming down and now has moved up. In fact, Oracle's moved up to a point where I am now going to move the stop up to this low. It's 182. This one's 182, almost 183. So I'm going to move the stop to 182 on Oracle. And this is exactly what I wanted to happen. So there's 182 right there. And you can see the 21-day moving average is 181.95. So that's going to go over the stop here by tomorrow. But this is exactly what I've been saying. I want a good stock. I want a good entry. I want to pull back to the 21-day, back to the mean, get in. So this one actually gave the signal after it went gapped up, but that's okay. And then I wanted to pull. So our stop originally was down here. And then I wanted to pull back without taking out the stop and then start moving higher again. And then I'll move the stop up to the low of where that higher high. So if there's a higher low. And I keep moving my stop up to just below the next higher low. And we keep on doing that until eventually we get stopped out. So we just moved that up to 182. We'll change that right here. You can see right now it's break even. So right now we will have a profit. So not much, a little less than 1%, but we will have a profit. And this is basically about 2 weeks also. Intel was moving down today substantially, but it came back as well. So a lot of these are starting to come back again. Nvidia is still flat so far. So this is sitting right on the 21. NVIDIA is going to decide what all of these things do, by the way. So depending on what way NVIDIA goes, I'm expecting all of these to follow tomorrow, especially Intel. So right now it pulled back up. You can see the stop is way down here right now. So that we're still in that one. Viper Energy had a nice update today. So we've already moved our stop up. We're going to leave it right there. We are not at break even yet. So the goal is to try to get to break even. Right now it's at the stock is at 54 and our break even point is at about 52, but we're going to leave the stop there on this one. And there's ADMA. We talked about ADMA already. ADMA moved up nicely today. So we'll continue to watch that. If it keeps moving up, we're going to move the stop up to the 21 day. And the goal is to get it up here to the break-even point, which I'll show you what that would look like. That would be right there. So our goal is to get the stop right there. And notice that's also the resistance level where it had this big sell-off right back here. Now, all the people that bought here and then had this big sell-off, they've all pretty much gotten out probably right through this area. This is kind of a cup and handle right here. So that's the reason cup and handles work. There's a big downtrend. Everyone that bought over here at the high can't believe they did that, and they just want to get back to break even. So when it gets back up here close to break even, you see that it did on this one day. It actually went almost to it. All these people are selling because now they're at break even. It pulls back, then it goes back up again, and it breaks the resistance. So it heads higher. Traders, especially those that follow Investors Business Daily, because this is one of the patterns that they follow quite a bit, they recommend putting a buy order just above where that cup and handle top would be. So this big white candle is all of those buy orders. And then it pulled back again, but it did not go down. It went down to the middle of where the cup was, went down to the 21 day. All of this is very positive. So now it's moving up again. So what we'd like to do is to get the stop right up here to break even, which also happens to be the open for today. But we're not going to do it yet, because if we did, we probably would get stopped out just on a daily move down and then back up again. So we want to let it run a couple more days before we get back up here to break even. So anyway, that's the plan for ADMA. Kava pull back today. Let's see what it's doing now. It still looks pretty much the same as it did before. So again, same thing. Stop is down here at about 130. It's just below the low of Monday. So we'll have to keep watching this, see if it wants to go higher or not. And then finally, Coherent. Coherent is one that had a big run yesterday. And if you remember, we had three orders in. For ADMA, the order was put in above the close. So for today, so it was put in at 21 and it executed. So this one executed because it did go up. For Kava, we also put it in above the close. We put it in at 142. In this particular case, it went higher. Look at it in a 10-minute chart. So it opened, you can see right here, it opened up here, took out our buy order, and then sold off most of the day. So that's the kind of thing that can happen when you put a buy order like that in. It's all usually recommended that you wait until about 10 to 10:30, wait for all the volatility to subside before putting your order in. I wanted to show you how you could put orders in after the close and you don't have to actually be watching the market. But this is what can happen when you do that. So it went up, took the buy order, and then sold off. And then from 2 o'clock on, it's starting to move back higher. So we'll see if that will continue. Hopefully it will. Coherent, however, was the opposite. Coherent, in this case, if you remember, we put the order in lower than where the close was. So it closed up here at about 104, and we put an order in at 102. And I said at the time that there is a possibility, especially with a big run up like this, it's a possibility that it's going to gap down, which is exactly what it did. In fact, it opened at 101.89. So it opened down here. Our order turned into a market order. Okay, so what you'll notice is it opened at that little tick to the left, and then it went up. So yes, it was below 102, but it actually executed at actually exactly 102, executed at exactly 102. So, but it opened at 101.89 and then started to move higher. So it actually turned into a market order at the open at 101.89 and then started moving higher, and it executed at exactly 102. So in this particular case, it was actually trading below the buy point for the first part of the day, and now it is positive for the day. So now it's doing what we wanted it to do. It's got a nice little volume right there and crossed over into positive territory right there just before 2. So this is positive. This is a positive short-term signal for this one. We'll continue to watch it. Remember, this is a 10-minute chart. So each of these bars represents 10 minutes. But that's what it looked like for today. So right now, we are not moving the stop up yet on that one. But the goal is to move the stops up on all of these till at least we get to break even. And right now, if all of these stop out, we would be down 1.5%. One of the questions that somebody asked was, what is your average gain on your closed trades? So the first thing I want to mention is that in this kind of exercise, you don't want to necessarily base things on closed trades because we're really just starting out. And by starting out, I mean, we've only been doing this for 2 weeks. So starting out, I would expect for a number of the trades to close out negative because we just ended up wrong. You can look at Uber. Uber actually was only 2 days before earnings. So earnings weren't great, so it gapped down and we got taken out. So Powell, on the other hand, we bought way back here, right there. There's the downtrend right above the 21-day. We got in, it moved up and then started pulling back, and we stopped out right here for a gain. So that was a gain because we kept moving our stop up. And then Powell had earnings, and it's now at 261. We got in at 260. So it actually right now would be a little above. We actually would have a small profit, but instead we had a much bigger profit. Now let's take John Carter's idea that we might switch to at some point, and let's count 8 to 10 bars. So there's 1, 2, 3, 4, 5, 6, 7, 8 right there, 9 and 10. So if we had just taken his advice and got out on 8 bars or even 10 bars, we would have had a much bigger gain than waiting for our stop to be taken out. Now we did have a gain anyway, but we could have had a much bigger one. Now that is short-term trading. So the fear, not fear, but the possibility on something like that is that actually, let's look at VRT. I think would be a good example. No, VRT we would have got out right there, but on some of these it could go up, we get out, and then it pulls back a little bit and just takes off and keeps going higher. So the hard part whenever you get out at the top like that is deciding when to get in, and that's when psychology takes over, and you start thinking, well, I'm not getting in at a higher price. I was in way down here before. I should never have gotten out. Maybe I should have stayed in, but of course you made a great profit. Maybe I shouldn't have got out, pull back a little bit and then took off. So the hard part is figuring out when to get back in. If you use the same rules though, you'll have another chance to get back in. Would have had a chance there, would have had a chance there, would have had a chance there. So anyway, that's again, a good example of with Powell, what would have happened with John Carter's rule, 8 to 10 bars, and just get out no matter what. Let's look at the Keltner channel on this one. So you can see right there. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So all of these bars right here are above the 3x. They're actually into the 4x ATR, and stocks don't stay there very long. They will revert to the mean, and that's exactly what happened. Reverted to the mean, waiting for earnings, and then earnings missed and a gap down. But this is the beauty of using Keltner channels like this. And I have all these little buttons set up over here. And for those that are subscribers, if you go to the chart lists and scans page, you can get a list of all of my scans right here. You get a list of all of my buttons. When I update, I'm going to update this again. But I update all of these, and you can, just click on this. If you have a stock charts subscription, if you want one of their subscriptions, just click here and it will show you all of them. But I give you all of my buttons that I use that you can then use in yours as well. So I have one for moving averages. You can see all the moving averages, the squeeze. Here's John Carter's squeeze right here. It actually had a squeeze right here when turns break green. So there's the squeeze from John Carter. Coincidentally, right where we got in. So this is what John Carter would have used, and my process used the same bar, the same day. Very interesting. I hadn't even looked at that, but this is his squeeze, and it basically is the same place where I entered. So that was pretty cool. Nvidia is going down right now. It's down $7, down 5%. So they must have had average earnings. I don't know. I'm not looking at the earnings, so we'll see what happens. This is what our portfolio looks like right now. We're up $1,800. Today's Kava is down slightly today. Intel, is, of course, is down. Probably is going to drop more if Nvidia is down $6 now, down 4%. So we'll see if that continues after their earnings call. VRT was down a little bit, but it's up overall. So the open gain right here is the total gain. So these are the ones that are in here. You can see all of these have the stops in, the open orders right here. So if they do start going down, they're going to get stopped out. And if Nvidia is going to lead the market, and right now it's down $5, it might not be a great day tomorrow. So anyway, that's it for today. Thanks for watching. Keep an eye on Nvidia, and we'll see what that does for tomorrow. Thanks, everyone.